All right, traders, here's everything that you need to know in the stock market this week. Let's get you ready for Monday. So we're going to be going over the major news and data drops. So we have a lot of data coming up, mainly the FOMC. The Fed is going to have its Fed meeting before it goes on break in August, and then they will resume in September. But what to expect from the July 30th Fed meeting? We also have earnings coming up. So we had two of the Mag 7 report earnings last week, Tesla and Google. We will be diving into Tesla a little bit more, as well as Google, but I've been giving you guys Google every single video for the last 2 months, telling you that it is only a matter of time. This is one of the very few opportunities that has a chance to play catch up, and catch up it did. So we will be going over the couple of earnings that have passed, as well as all of the earnings that are yet to report, and give you some potential earnings plays as well. I told you guys about the strangle on Tesla. That one worked out nicely, made 50% on that play. More on that later. And then what are the chances for an August to September pullback? I keep talking about this, that August is traditionally the worst month for the stock market the last 3 years. We have seen corrections every single August for the last 3 years for different reasons. And September, if we're talking about in isolation, is the worst month for the stock market in stock market history, not just as of recent times. So with the stock market right now at the levels that it's at, the number of days trading above the 20-day moving average, which we are now reaching record levels, what are the chances for an August to September pullback? I think pretty high, and I think that there will present some opportunities to continue our long streak into the next year. And then I'm going to be giving you an update on recent trades because I'm all about transparency on this channel. So everything that we talked about, from Google to Amazon to AMD, which is absolutely killing it, as well as some of these stocks that are still in consolidation like ASML, and the ones that have yet to rally like Tesla. Most of them have actually hit a moonshot, but there are a couple that I do want to update you on. And then what other trade opportunities and a Tesla update. So the trade opportunities, again, I don't know how many times and how many videos I can give you guys trade opportunities, but I'm going to keep trying to find opportunities where I find them in the market. Let's get right into it. So as we approach the August 1st tariff deadline, we are getting more good news. So Trump announces an EU trade deal. Trump was just in Europe talking to the European Commissioner, Ursula von der Leyen, and they announced a deal to implement 15% tariffs on the EU. The EU would not retaliate because of those tariffs. Initially, there was a thought that those tariffs would be 30%. So as I said, this seems to be the negotiating tactic of Trump, where you announce a higher tariff and then negotiate down to a tariff that everyone seems to accept, which is probably the tariff that he initially stood out for. So 15% tariff, but moreover than that, the EU is going to purchase $750 billion worth of U.S. energy and invest an additional $600 billion. So now we're talking about over $1.3 trillion. So an additional $600 billion worth of investments in the U.S. above current levels. With regards to the China trade deals, we're getting a little bit of conflicting info as of the time of this recording, but it seems like there is another 90-day pause between China and the U.S., and that they're going to extend a reprieve for another 90 days. However, Howard Nutlick came out today and said that that wasn't true. So who knows? I think we will get more news about this in the following week. In terms of major data drops, this is a huge week here. We have JOLTS job openings on Tuesday, no news on Monday, which means that we won't likely get the volatility that we like as day traders. More on that later. And then on Wednesday, we have ADP non-farm employment change. We also have GDP on Wednesday. Now, that's not the most important thing on Wednesday. We also have the FOMC conference. Jerome Powell is going to give a Fed press conference announcing, in my view, likely a pause. There is no reason to lower rates here, regardless of what Trump is demanding in the media. And then we have core PCE. This is another inflation indicator On Thursday, unemployment claims as well. And then on Friday, we have the unemployment rate. This is expected at 4.2%. Last month's came in at 4.1%. Remember how we talked about the unemployment starting to curl up? This does take quite a while, but this is typically a precursor to a recession. So I don't expect unemployment this week to come out terrible. But over the coming year to two, I expect this to worsen, and likely we hit a recession late 2026, 2027, in my opinion. So that is the major news and data drops. Let's talk about what earnings are coming up this week, and then I want to dive into Tesla and Google earnings a bit, and then talk about what are the chances of an August-September pullback, as well as give you some potential money-making opportunities. Here are the earnings this week, a huge earnings week. So we do have Visa, SoFi, PayPal, Boeing, UPS, Starbucks, Booking, Spotify, all reporting on Tuesday. On Wednesday is when we get more Mag 7. Oh yeah, United Health Group as well on Tuesday. More on that. There might be an earnings opportunity there. Meta and Microsoft report after close. On Thursday, we get Apple and Amazon. Now, Meta and Microsoft reporting the same day as the Fed meeting as well. So let's see if we get some earnings opportunities here. But after this week, 6 of the 7 Mag 7 stocks will have already reported. Now, let me give you my opinion here on Tesla earnings, because honestly, the earnings were dog shit in my opinion. But is there something beneath the surface that can explain these numbers, or is it just outright a company that has lost its glory days and really needs a miracle, like Robotaxi, Optimus really needs these things to work out in order for it to come back? And also, what should we do if we currently have Tesla positions or are looking to start Tesla positions, right? So if we take a look at the financial summary, this is straight from Tesla, and it is just absolute garbage. The total automotive revenues year over year, minus 16%. Even energy and energy storage, which was a growing sector, minus 7%. Services and other revenues, the only one that came in plus 17%. Total revenues, minus 12%. Total gross profit, minus 15%. Total GAAP gross margin, minus 71 basis points. Operating expenses, minus 1%. Income from operations, minus 42%. Operating margin, minus 219 basis points. This is all year over year. Adjusted EBITDA, minus 7%. Net cash, minus 30%. Free cash flow, minus 89%. So not only are their sales down, but their margins are down. Their cash flow is down. It just really doesn't look like a pretty picture if you are bullish on this company from those metrics. But is there something that can explain why their free cash flows came in at minus 89%? And what I was looking for was to see whether Tesla was actually spending money somewhere, and that contributed to the major drop in cash flow. So if we look at their capital expenditures, Tesla's capital spending surged to $11 billion in 2025, driven by investments in AI infrastructure, factory upgrades, and projects like Optimus and Robotaxi. This high capital expenditure subtracted from operating cash flow significantly reduced FCF, with Q1 FCF at $664 million, down 71% from $2.28 billion. So this wasn't the only reason, obviously, that their free cash flows dropped. The declining vehicle deliveries and revenue obviously contribute to it. Margin compression, their margins are getting worse. As you can see here, auto gross margins fell to 13.6% in Q1. That's terrible. But we have seen companies struggle in the past. Meta comes to mind, for instance, where they have had to make huge capital expenditures and take risks in order to stay in the game and in order to enter new markets. And that is what Tesla is doing here. Now, is the CapEx of $11 billion enough? Well, I don't know if it's enough for the Optimus line, right? There are already a ton of companies that have working robots. Even Amazon has, I think they have 1 million robots now working all over their warehouses globally. But for Robotaxi, the one appealing thing for Robotaxi was that it would be easy for Tesla to scale, because Tesla is not spending a large amount of money to produce a new vehicle that, say, can compete with Waymo. They're using their existing vehicles, existing technology, etc. So, I think that this spend with regards to robotaxi makes sense. I don't know that it's enough to make Optimus Robot a threat in the robotics market just yet, right? Or make a dent in the robotics market just yet. I'm not sure, to be honest. Now, robotaxi was set to release in San Francisco. However, there is a lot of back and forth between regulators and between Tesla. And there's some rumors that California said under no circumstances will robotaxi be released, supervised or otherwise. Obviously, the permit is still in process, right? So there isn't a definitive decision on it just yet. But as of now, yes, Tesla is not allowed to test or transport the public in California. However, what they can do is they can essentially use a driver behind the wheel as opposed to a driver or a monitor in the passenger seat. And so that is likely the route they're going to go until this is settled in courts. Not a great look, honestly. But it's not a closed and shut case. It's not a closed door. However, it might take a while before Tesla can get approved in California. But more importantly, we are not getting pertinent updates from what is going on in Austin. And to me, that is more of a concern than the regulatory framework that corporations have to normally jump through hoops to get through in a state like California. I live in California. I know how tough the state can be in order to conduct business there, especially emerging businesses like robotaxi. But I think that the lack of updates in Austin is more concerning than the regulatory framework that Tesla has to work out in California. Now, I'll talk more about Tesla when I go over the trade opportunities towards the end of the video. But in terms of an earnings trade, I gave you guys this. I told you that Tesla beats the expected move most of the time. So 75% of the time, Tesla beats the expected move. You can see here, this is just this last time it beat the expected move, but it beats the expected move most of the time. And so what makes sense when Tesla or any other company mostly beats the expected move? You want to trade a strangle. A strangle is when you buy a call and a put, because I'm not trying to guess directionally whether Tesla is going to go up or down. Any company can beat earnings and tank or miss earnings and rally. So I don't really care about trying to guess direction and be Nostradamus in that respect. What I want to know is, does a company beat the expected move? If so, you buy a call and a put and then bet on the stock, whether it goes up or down, to beat the expected move. So the expected move for Tesla was plus or minus 7%. And I bet that Tesla would beat that based on the fact that it does so 75% of the time. This is an asymmetric bet. So I sent out the strangle alert in the Traveling Trader Academy, basically buying the 355 call, the 315 put, and we closed those for 50% the next day because Tesla tanked more than the expected move. So the calls go to zero, but the puts print disproportionately, and you get a nice little win here. But if you guys have been keeping up with the videos, you guys know the swings have been absolutely killing it. AMD, Amazon, SMCI, Google, I can go on and on. It's just been an absolutely crazy week last week. In addition to the day trades, you want to see a clip of our live executions and want to watch me day trade live, stick around till the end of the video. I'll post a clip there. But so many of our Traveling Trader Academy members killing it. Kara says, I'm buying a ticket to Istanbul guilt-free next week. We're going to Nice, France with our gains next week, says Ash. Torres says, going to buy a ticket to Thailand after market close, 10 days holiday. Super proud of these folks, man. These people have come a long way, put a lot of time into wanting to learn how to trade, not just blindly trying to follow someone's alerts. If you want to trade live with me every single morning at market open, link in the description below. Would love to have you. Let's keep going with this video. In terms of Google, man, I told you guys this right here, the search fear candle, this candle right here on May 7th, this was the candle where reportedly an Apple employee came out and said that Google searches are down on iOS. And once we traded above that and retested it, there was definitely a narrative breaking opportunity there. And for anyone that has been keeping track of Google search, knows that search is growing. I don't understand where this idea that search is dying comes from. Actually, I do know where it comes from. It comes from clowns in the industry like Gene Muster, who said back in May that Google is down 6% on comments from Apple, what I just told you guys, But it said that this is a seismic change and this is the beginning of the decline. How do these people get paid, man? How do these people get paid? But people who are retail can do better due diligence than people who are paid to do this. And now, after earnings, he said Google calls wrapped up. And anyway, he said that that investors will likely come back. If you take a look at Google's earnings, once again, search is growing. Not only growing, it's growing in double-digit capacity. Not only that, Google searches themselves, not just search revenue, are up. So you can see here in red, this is Google search growing 12% year over year. YouTube growing just as fast as searches. And moreover, YouTube is now as valuable or more valuable actually, or generates more revenue, than Netflix as an entire company. Now, Google Network seems flat year over year, and Google subscriptions, platforms, and devices up 20% year over year. And not only that, but they have the top rated AI platform. Gemini 2.5 Pro is rated the #1 AI platform in the market right now. And nobody can say that I did not tell you guys about Google time and time again, inching slowly like an inchworm on the way up and then absolutely blasting in July to cover that gap that we were eyeing 2 months ago. Now, if we look at Google's forward PE, Google is still trading at a 19 forward PE. If we take a look at the rest of the Mag 7, right? Let's take a look at Nvidia trading at a 42 forward PE. Let's take a look at Meta trading at a 27 forward PE. Let's take a look at Microsoft trading at a 38 forward PE, right? Google is still the cheapest Mag 7 stock. The same narrative that I was telling you guys back here, that Google is the cheapest Mag 7 stock and will see catch up. And if my assertion is correct that this is like what we saw in the late 90s with the dot-com boom, and we do have a year or two of extreme growth left, especially with all the liquidity that is coming into the market due to Trump's policies as well as investments in the US as Trump is signing trade deals, then I think Google can trade comfortably above its all-time high, above 207, because even at a 25 PE, Google will still be cheaper than all of the Mag 7. So my year-end target on Google is between 225 and 230, currently trading at around 193. All right, so what are the chances of an August-September pullback? Now, if we're just going off of seasonality, the chances are very high. Like I said, August and September are the worst months in the stock market, right? These are actually the only two routinely negative months in the stock market. And we have seen corrections the last 3 Augusts. Last August, minus 10%, August before, minus 10%, August before, minus 20%. We were in a bear market 3 years ago. Moreover, right now we are approaching about 64 days that we have traded above the 20-day moving average. Now, the longest that we've ever seen is 101, but that was back in the 60s. Remember how I said this is very much like the late 90s? In 1997, we traded 76 days above the 20-day moving average. So that would put us, if we are to follow trend, and these are records, by the way, this is not typical, but if we are to follow this trend, that means that sometime by August, we should see a pullback. And if this is saying that we will mean revert to the 20-day moving average, well, that puts us right in line with what I was telling you guys for a while now. If you take a look here, the blue is the 20-day moving average. This is the S&P 500. Look what's right here. This is the gap between May 9th and May 12th. And if we do drop from here, then we are looking at about a 10% correction. This would be fantastic in my opinion, would be healthy in my opinion, and would be a sensible level if that is where we actually stopped. We do have another gap down here between April 22nd and 23rd. Remember that all gaps don't have to be filled, but most of them do. However, if we did drop down there, we're talking about a minus 17% correction. Moreover, if we take a look at this, this is the NAAIM index and the S&P 500 in red. You can see that we are now diverging, where the NAAIM exposure is being taken out of the market as the S&P 500 is rallying. Now, typically these do move hand in hand, but sometimes we do get this divergence. However, when we do get this divergence, it does sometimes lead to a drop in the market. So if you look back here in 2024, when we hit a peak and we started diverging, you could see that we did get a correction. Same thing at the time that I was talking about in August, where we did hit a peak. We do see this NAIM exposure dropping, and we did get a drop in August as well. Now, it's not the only reason why, but these divergences do tend to lead to pullbacks and corrections. So I'm still of the mindset that we will get a correction in August and September, and it will be a healthy one, and it will be one that, in my opinion, I'll just talk about myself, I will be adding to that, right? And like I said, in August and September, there are a few things that you might want to consider doing. You might want to consider hedging by buying calls on the VIX or call spreads on the VIX. If you are short term on any triple leveraged ETFs like SOXL or TQQQ, you want to consider taking profits because you do not want to hold those in a correction where those, if the S&P drops 10%, or SOXX drops 10%, those will drop 30%, right? If the NASDAQ drops 10%, TQQQ will drop 30%. I'm not trying to sustain that level of damage. I made a ton of money on TQQQ and SOXL. We bought SOXL at 7. I told you guys about it in these videos. I already started selling calls against my shares. I sold calls against Tesla, sold calls against Google. I will likely sell calls against my QQQ, against my SPY. If you want all of the details of how I'm hedging, join us below where I will give you my market, or where I give you my market updates every single day. Also, it's important to note that it's not like I'm going to wait until the clock strikes August 1st. I'm still going to be monitoring the situation from a macro and from a chart perspective and decide when I'm going to do this. It's not going to be like August 1st, time to deploy the plan. That's not how it works, right? Also, there are a couple of things that I'm waiting for from an earnings perspective as well. All right, I'm going to give you an update on recent trades and then dive into some potential opportunities. The recent swings that I gave you, AMD, we have now hit that 167 resistance. And even last week, I said, if we come down into this gap, I will buy calls. I'm telling you guys this in the videos, not even just in the Traveling Trader private Discord. Ended up closing those calls as it hit the 167 for 100%. I gave you guys the Amazon setup in this video as well. Closed those calls for 50%. Like I said, breaking out of this consolidation and retesting, I think that Amazon will hit this gap. That was my thesis. Go back and look at the videos. Now, Netflix is a short that I talked about in my last video. I did not get my entry on this. My entry on Netflix short was around 1252, and we did drop ever since. I'm still potentially looking for Netflix shorts. Not sold on that just yet. Meta has popped from this level that I was eyeing, but we still haven't seen a breakout yet. And now we are coming up against earnings, and it's going to be very hard to just blindly long Meta without looking at how it behaves during earnings, which we will look at in a second. But these calls that I told you guys that I bought are up. They're just not up a ton. They're up 10% at the moment. The Apple leaps that I gave you guys as well, these are up 25%. But Apple is waiting for an AI announcement here, and we are getting really tight. Gave you guys this pattern on SMCI as it was breaking a trend line that it established in March of 2024. We broke out of this pennant, broke out of the trend line, retested the trend line, and now it is pumping once again. SMCI tends to see a pre-earnings pump. It reports earnings on August 5th. And when it is in an uptrend, if you go back and look at history, I studied this and I wrote this in my thesis in the Discord, but it tends to see a pre-market rally. So still liking SMCI here. Tesla is one of the very, very, very few duds. Like I said, I'm very transparent about my plays. Now, there are a couple of times that we closed above the Trump versus Elon candle and came back to retest it. And I thought that that might be the opportunity to break these highs at 367, but it continued to lollygag here. And we would pop above, back to consolidation, pop below, back to consolidation. And on earnings, we did drop 8%, and now we are back to consolidation. So it's going to take quite a few updates for Tesla to rally. I still think that it can break these equal highs at 367. We are going to need more announcements. What the hell is going on in Austin, and some sort of breakthrough in California. Without that, Tesla is just going to hug this consolidation level here and really be prone to negative headlines. Hopefully there aren't that many negative headlines left because the stock has seen a lot, but it is really open to negative headlines if it does not see any sort of traction on the approval in California or any pertinent updates in Austin, then Tesla will be subject to negative headlines. So for now, it is loving these consolidation levels, and it is now a very headline-driven stock. It does not have its own self-producing momentum. So although we made money on the strangle here, still underwater on my August calls, and I have to make a decision whether to roll those once again or just close them out and accept the loss on Tesla. Now, if I do close them out for loss, it's not going to be huge because I did actually hedge by selling calls, the 400 calls expiring August 15th. The day after earnings, these pumped to 82%. So even though that doesn't cover the entirety of my calls, it was a hedge that will reduce some of the hurt if I do end up closing those prematurely. And ASML, I did not have a short-term play. I do not like the way this stock moves in the short term, but I do have shares and I'm still bullish on ASML long-term. You could see this inverse head and shoulders here. You could see us just back in this really ugly consolidation zone. This to me is a very long-term stock, and I'm playing the very long-term trend here that you could see that's been established since 2008. Now, I did talk about potentially shorting gold when gold did actually break this daily trend line here that we've established since the beginning of the year, and we finally did. So I am going to be monitoring the dollar as well. I want to see if the dollar finds real support here. And if it does, I will be sending out a gold short that I think can pay very heavy if this ends up playing out. Every time gold goes on a generational run like this and the dollar drops to a major support level, we tend to see a big mean reversion on gold. So I want to take advantage of that. You can see that happening here in 2020 when gold hit an all-time high back then, and we saw a nasty mean reversion. Same thing in 2022, saw a nasty mean reversion. So if we can catch this here, a mean reversion on gold, that will be a pretty big play. But that one, I need to really study it in order to send out the details properly in the Discord. In terms of stocks, man, you guys, if you haven't done anything up until now and you didn't do anything that I mentioned in my videos or look at those ideas that I mentioned in my videos, really, we are spread very, very thin in terms of opportunities. There are a couple of things that I'm looking at, right? United Healthcare, I'm still looking at. Of course, United Healthcare reports earnings on July 29th. Now, here's what's interesting about its earnings. United Healthcare beats the expected move over 75% of the time, meaning up or down, it beats the expected move. Rarely does it trade within the expected move. So United Healthcare, come earnings, based on data, will likely beat the expected move either side. Now, you might say to yourself, oh, you're just saying that it can go up or down. No, asshole, that's not what I'm saying. What I'm saying is I'm just interested in whether a stock beats the expected move or not. If it does, I want to buy a strangle, right? So I'm not concerned whether it goes down or up. If I have a strangle, I just need it to make the disproportionate move up or down for that strangle to pay. Matter of fact, if you look at long strangles and straddles, the average return for UNH is 145% for strangles, 70% for straddles. Now, if we take a look at Meta earnings, Meta doesn't beat the expected move. It's a 50-50, right? It beats or meets the expected move 50% of the time. So this is an example of a stock that is not worth trading during earnings. Now, Apple misses the expected move most of the time. So most of the time, 70% of the time, Apple misses the expected move, which means that you likely want to trade an iron condor, something that is a neutral strategy, betting that the stock stays within a certain range. The only thing is, if Apple announces some sort of AI acquisition, then this stock is going to moon, right? So although normally I would trade an iron condor in Apple stock, I'm not going to trade one now. Like I said, I find it very suspicious that Apple will go through another upgrade cycle and not tell us any AI updates. So between now and September, when they normally release their new devices, I find it very hard to believe that we won't get an update on Apple Intelligence and what moves it plans to make with regards to AI. So, you know, I remain not bullish on the stock, but I'm leaning more towards that Apple will give us an announcement And based on how this pattern looks like it's due for a breakout. We broke out of this pennant. We broke out of this bull flag. If we do get an announcement, I think Apple will catch up to the rest, to Amazon, to Google. I'm waiting to see if Uber can fill this gap here. That is another potential long opportunity that I'm looking at. And other than that, the fact that we're trading this many days above the 20-day moving average, I really think that the best move here, if you have done absolutely nothing, the best move here is to wait for a correction or a pullback come August or September, because in my opinion, that is buyable. I think we are still in a dot-com like phase, and we are still in a phase where we are generating a lot of liquidity and euphoria from the Trump tax cuts, from these investments in the US, from these other countries due to the tariff deals. And there's just a lot of euphoria around AI. We're not seeing any sort of capex drop in terms of spending from the hyperscalers. So I do think that this train continues along for at least another year, right? And that just, to me, that lines up with the current AI narrative, the current liquidity narrative, and the fact that we are likely going to see quantitative easing by the Fed at some point between now and next year. But I do think that this is setting up for a bubble pop come 2-3 years from now. It's going to be pretty violent, in my opinion. Anyway, traders, that is it for this video. If you want to trade live with me every single morning, link is in the description below. I trade live like this here. You will see a clip at the end of this showing you how these sessions go. Also, if you want access to all of my alerts, all of the moves I'm making, all of my analysis, everything that I'm thinking about, how I'm hedging, link is in the description below as well. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace. Tesla took out pre-market low and took out yesterday's low in that fair value gap. It reports earnings tomorrow. I think there's a long on Tesla. I'm looking at the 3:30 call expiring on Friday. I think we can get to 9:30 open. Yeah, that Tesla trade doing nicely. Just get above this fair value gap, bro. Come on. 2-to-1 is about right here, so take it if you want. I want to see if we can get to 9:30. I actually think that it can go higher to that fair value gap there. All right, Tesla, give us that close, give us that push. 9:30 print incoming. For the love of money, getting on every last nerve. Tesla finally turned green. What a push, bro. All right, I'm taking that off. Done. 20%